Welcome back, everyone. This is the weekly performance report for July 22nd through July 26th, 2024. Noticeable activities over the last week. Nothing. I sold nothing. I bought nothing. As I said, stacking cash, trying to deploy the capital into a more concentrated portfolio, which means I'm trying to pretty much at this point just not trade around a bunch of stocks for, in swing trade fashion. So I haven't, so nothing's happened there. But in other news, the St. Joe Company, ticker symbol JOE, released their Q2 earnings results. So I thought I'd talk about that briefly and superficially and give you a couple of takes of mine in regards to that. So the St. Joe Company highlights record-breaking results for its hospitality segment for the second quarter 2024 and releases video tour of diverse hospitality offerings. Hospitality has been the play all along, but these things take time and the returns are lumpy, quarter to quarter, and people get in their feelings when it comes to lumpy returns. I'm not going to read this, but all of it, but highlights for the second quarter of 2024 compared to the second quarter of 2023. Hospitality revenue increased substantially above our prior quarterly record achieved in the third quarter of 2023. Hospitality gross margins increased to 39.2% in the second quarter of 2024 as compared to 26.2% in the second quarter of 2023. I'd like to add before I forget that G&A, general and administrative, it's important when you're investing in a company that's growing, at some point in time, you want efficiencies, which is to say that although the company grows, the management fees, essentially, of growing that company should at some point should not be growing indefinitely in line with revenue growth, because otherwise, what's the point of it? You're just taking that money and paying more people to manage things. And some companies, I won't name any, do just that, which is concerning. But they're not doing that. And you can see that by margins increasing. Hospitality revenue increased by 38.1%. Leasing revenue increased by 19.4%, while real estate revenue decreased by 51.1% as compared to the second quarter 2023. Overall revenue in the quarter was $111.6 million as compared to $128 million in 2023. So I'm not trying to brush over that. The real estate revenues decreased by 50% compared to Q2 2023. I really kind of don't care too much. That's not why I'm in this. This is, as I noted in my article, and there's a link in this article to that first article, hospitality is what I care about. And I'll just leave that there. I'll briefly touch upon it in a moment. Over 22,500 home sites are in various stages of planning or development. Okay. And then third quarter dividend increasing 16.7% to 14 cents per share versus 12 cents per share. So it's still under 1%. And it depends on where your cost basis is, because dividend increase, if you have a low cost basis on something, it's incredible. If you bought Coca-Cola back in the day when Warren Buffett bought Coca-Cola, this is hyperbolic, but hopefully it serves the point. Any dividend increase that Coca-Cola does is a very large percentage of your cost basis. So it's a beautiful return. It's like if you bought Transocean. Let's say you bought Transocean at $1. I talked about this once upon a time. You buy Transocean at $1, and now it's $6. Now it might have a $1 swing any given day. So let's just call it a 15% move, and that can happen. But it's incredible. Like, you could lose what was your cost basis or make what was your cost basis in any given day of volatility. And it's a really different way of viewing the world. So that's interesting. But I myself did not get into St. Joe at any meaningful dollar amount that would make this dividend hike a disproportionate amount of my initial investment, but it's interesting nonetheless. Lo and behold, their hospitality segment is kicking ass. Yep, isn't that what us shareholders are betting on? Hasn't that been the game plan? Isn't the annuity-like cash flows from this what we're betting on, as well as the reinvestment of those cash flows into more cash flowing assets? Their revenues went from being dominated with land sales to residential sales, and now with hospitality sales. That's the arc of development. And the reason I say that is I've seen a few posts about St. Joe talking about, wow, what is it called when you do something and then you're successful and then it's kind of like a home run hit and then you running the lap or whatever, boasting. There's some of that, which is fine, I guess. But some of it is, a couple of the comments were like, they were surprised. And that's, I would say, because they're ignorant to be surprised. So, it's just, that's why I said it. It's like, the hospitality is the name of the game. It's the play. Like, I don't, it's bound to happen this quarter, next quarter, last quarter. Anyway, I digress on that. I've seen a lot of images like the one below, yet St. Joe seems to be trucking along. Interesting how that works. 15 housing markets with the highest home price correction risk, according to Parcel Labs. And here you see pretty much all of Florida. Now, they're all pretty much in Florida, and 14 of the 15. And you can see that St. Joe's area is in blue circles too. Yet, I'm not seeing this image reflected in management team's commentary. So let me just read you a little bit of what they had to say. Throughout the first half of 2024, we continued to generate positive financial results. While macroeconomic factors such as inflation, elevated interest rates, higher insurance costs, supply chain disruptions, labor shortages, financial institution disruptions, and geopolitical conflicts, among other things, continue to produce economic headwinds and impact buyer sentiment, demand across our segment remains strong. We believe this is primarily due to the continued growth of Northwest Florida as a result of increased migration, which we attribute to the region's high quality of life, natural beauty, and outstanding amenities. Despite the strong demand across our segments, we also continue to feel the impact from the aforementioned macroeconomic factors. In addition, inflation, high insurance costs, and elevated interest rates have increased operating costs and loan rates as compared to recent years. While elevated interest rates have negatively impacted buyers' ability to obtain financing in the housing market generally, the impact has been offset by the net migration into our markets, limited housing supply relative to demand, and the number of cash buyers. Market conditions have also not caused an increase in cancellation rates as home builders have continued to perform on their contractual obligations with us. A relevant KPI that I like to use is total passengers for the Northwest Florida Beaches International Airport activity reports. And however you want to split it, it's either up roughly 19% or 16%. It's up 19% on a month May of 24 to May of 23 comparison, and then on a year to date, it's up 16%. So total passengers 19% or 16.2%, however you want to look at it. Nonetheless, it's growing. It's definitely not shrinking, and it's growing at a good clip. And where's the dividend growth investors at on this name? Crickets. FYI, they're raising the dividend 16.7%. But with news like the below image, St. Joe's probably uninvestable. Bay County closes beaches following 2 shark attacks in neighboring Walton County. If you're interested on my opinion of St. Joe, here's a link to an article I've written. To quote that article, hospitality is what I care about. With all of that out of the way, let's close this off with my performance for the week. I ended the week up 2.75%, and here are my names. The cash position is ever so slowly building, now almost at 6.5% cash. As I've announced before, both Tidewater and Kinross have hit at some point the 100% mark of performance in my portfolio, and now you can see that Tidewater's up only 85% and Kinross is up only 87%. And is what it is. Just fun facts. I commented on how they hit the 100% mark, and they're not hitting any higher marks since then. Genie has done quite well. I'm a little concerned as a consequence of the amount I've seen it being talked about on Twitter in the last week. Like other stocks I tweet about, and copper is a big thing, and then now that just pulled back, and then China was a big thing, a month or so ago, and that's pretty much, well, pulled back to where it was, and on. You had that with Jin Restaurants, I think. GENK is the ticker symbol. Then you had some stuff about XPOF, but the CEO got fired and this and that. So that bad boy's ripped and is actually higher. Then just on it goes. So Genius is in a soft version of that hype of sentiment, let's call it. So maybe that'll pull back. I don't know. Nonetheless. But I'm finally up 30% on that. Since I bought it, it's pretty much just either been in the red or flat. So see what happens. Like I said, 20% swings are meaningless, especially for names like what I have in my portfolio. And then, I don't, like I said, haven't bought anything. So yeah, I don't really have much to comment on. So with that said, I'll end it here and thank you for watching. And until next time.